Now we are discuss about the cash budgeting. I have already explained that cash budgeting is estimation of future receipts and payments of cash. It is helpful to analyze the flow of cash. It is also helpful to plan and control our expenses payment. With this, we can find future need of cash. In cash budget, first of all, we estimate our all incomes like cash from sales, cash from interest, dividend and other receipts. After this, we estimate our all expenses. If our cash receipts are less than the total cash payment, we may take decision to get cash through loan. Today, we will focus on cash budget example because we think examples might be simplified to improve reading and basic understanding of any topic of accounting. Okay. Now, let us see the model of cash budget. The cash budget in the sense, in generally, we have to prepare the cash budget, opening cash balance, add all of cash budget. First one is opening balance. Here different months are here, January, February and March. So we have to record the information about opening balance in the month of January. Closing balance in the month of January is the opening balance in the month of February. Closing balance of February, that is the opening balance in the month of March. So first one, opening balance. The next one is add receipts. Here receipts in the sense cash sales, receipts from debtors, interest and dividend, sale of fixed assets, sale of investment, bank loan, issue of shares and debentures and others. So these are the total receipts. Cash purchases, payment to creditors, salaries and wages, administrative expenses, selling expenses, dividend payable, purchase of fixed assets, repayment of loan, payment of taxes. So these are all payments. So here which is added with the total payments, that is represents A, B. So A which is represents the total receipts. So the closing balance in the month of January, total receipts minus total payments. So that is the closing balance of cash in the month of January, which is the opening balance in the month of February. Then the closing balance of cash in the month of February, which is the opening balance in the month of March. Okay, this is the model of cash budget. Now, we are going to see how to prepare the cash budget. Here, from the following data, prepare a cash budget for the 3 months commencing from 1st June 2007 when the bank balance was rupees 1 lakh. So, we have to prepare the cash budget for 3 months. 3 months which is commenced from 1st June 2007. Here bank balance was given, that is the opening balance of rupees 1 lakh in the month of June. Here there are 5 months are given here, April, May, June, July, August. Here in the month of April, the sales value is rupees 80,000. Purchases 41,000. Direct wages 5,600. Production expenses 3,900. Administration expenses rupees 10,000. Sales 80,000. Purchases 41,000. Direct wages 5,600. Production expenses 3,900. Administration expenses 10,000 in the month of April. In the month of May, sales rupees 76,500. Purchases 40,500. Direct wages 5,400. Production expenses 4,200 and administration expenses 14,000. In the month of June, 78,500 is sales, 38,500 is the purchases, 5,400 is the direct wages, 5,100 is the production expenses, 15,000 is the administration expenses. In the month of July, 90,000 is the sales, purchases is 37,000, direct wages 4,800, production expenses 5,100, administration expenses 17,000. And in the month of August, sales 95,000, purchases 35,000, direct wages 4,700, production expenses 6,000 and administration expenses 13,000. So, sales, purchases, direct wages, production expenses and administration expenses. This information was given in the month of April, May, June, July and August. There is a 2-month credit period allowed to customers and receipt from suppliers. Direct wages, production expenses and administration expenses are payable. Here there is 2-month credit period. So, 2-month credit period allowed to customers and receipt from suppliers. Okay, you have to allow the credit period for 2 months, which is allowed to customers and receipt from suppliers. Here the direct wages and the production expenses, administration expenses, which is payable in the following month. So, production expenses and administration expenses are payable in the following month. Here, we have to prepare the cash budget for 3 months. Okay. Here, sales amount is 80,000, purchases 41,000. So, 80,000, here 2 months credit period allowed to customers. So, in the month of April, sales in the month of April rupees 80,000, which is payable in the month of June. 76,500 in the month of May. This amount is payable in the month of July. Then in the month of June, the sales amount 78,500, which is payable in the month of August. Then in the month July, the sales amount is 90,000, which is payable in the month of September. Okay, so 2 months credit period was allowed here. Then we also get the 2 months credit period receipt from the suppliers. So, similarly the purchases also we have to allow that is 41,000 in the month of April, which is payable in the month of June, 40,500 in the month of May, which is payable in the month of July, 38,500 in the month of June, which is payable in the month of August, 37,000 amount is payable in the month of September. Then in the month of August, the purchase amount is 35,000, which is payable in the month of October. Then direct wages, production expenses and administration expenses, which is payable in the following month. So, in the following month, in the sense 5,600 is the direct wages in the month of April. So, which is payable only in the month of May. Then 5,400, which is payable in the month of June. 5,400 in the month of June, which is payable in the month of July. So, the expenses, all those expenses, direct wages, production expenses and administration expenses, all those expenses which is payable in the following month. So that is the meaning of this problem. Okay. Now let us see the solution for this problem. First one, we have to prepare the cash budget June 2007, July 2007 and August 2007. We have to provide the separate column for this month. First one is opening balance. Here opening balance of June rupees 1 lakh. Opening balance in the month of June rupees 1 lakh. In the month of July 1,15,400. In the month of August 1,25,900. So opening balance in the month of June rupees 1 lakh. In the month of July rupees 1,15,400. In the month of August rupees 1,25,900. Then add receipts. Here what are the receipts are here? Cash sales, that is collection from debtors. So collection from debtors rupees 80,000. Here in the month of July 2007 76,500. The month of August 78,500. Okay, in the month of June collection from debtors. In the month of June, like April, in the month of April the sales amount is 80,000, which is payable in the month of June. So you have to allot the 2 months period, 2 months credit period. So in the month of April the cash sales which is payable in the month of June, 2 months period here. So 2 months period. In the month of April month, we have to pay the amount in the month of June 2007 80,000. Then May, in the month of May we have to pay the 2 months period. So July, the amount payable in the month of July 76,500. Then June 78,500 sales which is paid in the month of August 2007. So add cash receipts. We can get the cash from debtors. April month cash sales in the month of April 80,000, which is received in the month of June. In the month of July 76,500. In the month of August 78,500. The next one is less payments. Less payment paid to creditors. Here also we have to allot the 2 months credit. 2 months credit period. So in the month of April 41,000 credit purchases. This amount is payable only in the month of June 41,000. Then in the month of July 40,500. The month of August 38,500. Then direct wages which is payable in the following month. So in the month of May the direct wages which is paid in the month of June 5,400 in the month of June, which is paid in the month of July. 4,800 in the month of July, which is paid in the month of August 4,800. Then production expenses, which is also 4,200. This amount is paid only in the month of June. Here 5,100 in the month of June, which is paid in the month of July 5,100. Again 5,100 in the month of July, which is paid in the month of August. Okay, next administration expenses, which is also paid in the following month. So, in the month of May, 14,000, which is paid in the month of June. Then 15,000 in the month of June, which is paid in the month of July. Then 17,000 in the month of July, which is paid in the month of August. So, the total expenses on whole thing for 64,600, here 66,000, here 65,400. Okay. So, the net amount is, this is a total cash receipts, here total payments. So, 1,80,000 minus 64,600, remaining is 1,15,400. Here 1,91,900 minus 1,66,000, 1,25,900. 2,04,400 minus 65,400, 1,39,000. Okay. So, the cash budget which is prepared for 3 months, June, July and August. Here opening balance was given for in the month of June, rupees 1 lakh. Then add cash receipts. Here sales, credit sales, rupees 80,000 in the month of April. We have to allot the 2 months period for collection of the cash. So, 80,000 is a credit sales in the month of April. This amount collected only in the month of June. So, amount collected from debtors rupees 80,000 in the month of June 2007. Then 76,500 which is collected from the customers in the month of July 2007. Then 78,500 which is collected from customers in the month of August. So, first we have to totalize the first column, June 2007, 1 lakh is the opening balance, 80,000 is the total receipts, that is the cash received from debtors, 80,000. So, the total value is 1,80,000. Then less cash payments. Here what are the payments here? Payment to creditors. Payment to creditors rupees 41,000, direct wages 5,400, production expenses 4,200, administration expenses 14,000. Here expenses are paid in the following month. So, 5,400 is the direct wages of the month of May. So, which is paid in the month of June. Then direct wages rupees 5,400 in the month of June, which is paid only in the month of July. 4,800 which is made in the July, which is paid in the month of August. Okay. So, expenses are paid only in the following month. Then similarly production expenses and also administration expenses. Here production expenses rupees 4,200 in the month of June, 5,100 in the month of July, August 5,100. Then administration expenses 14,000 in the month of June, 15,000 in the month of July, 17,000 in the month of August. So, the total of all payments, that is 41,000 plus 5,400 plus 4,200 plus 14,000, the total is 64,600 is the total cash payments in the month of June 2007. Now, you have to find out the net closing balance. A closing balance which is find out like 1,80,000 1,80,000, that is total receipts minus total payments. 1,80,000 minus 64,600. So here so the net balance is 1,15,400. So 1,15,400 is the closing balance in the month of June. So 1,15,400, that is the opening balance in the month of July. 1,15,400 is the opening balance in the month of July. Okay, so in July 2007, here cash receipts from debtors 56,500. Then total receipts for the month of July 2007, 1,15,400 plus 76,500 is equal to 1,91,900. Then less payments. Less payments paid to creditors rupees 40,500, direct wages 5,400, production expenses 15,000, production expenses 5,100, administration expenses 15,000. So the total expenses incurred for this month 40,500 plus 5,400 plus 5,100 plus 15,000 plus 60,000. So the total is 66,000. The total cash payments 66,000. Total receipts 1,91,900. So 1,91,900 minus 66,000. The net amount is 1,25,900. Okay. Then here 1,25,900 is the closing balance in the month of July, which is the opening balance in the month of August. So 1,25,900 is the opening balance in the month of August 2007. Here receipts collected cash collected from debtors 78,500. The total receipts like 1,25,900 plus 78,500 is total is 2,04,400. The next one is payments. Amount paid to creditors. Amount paid to creditors rupees 38,500. Direct wages 4,800. Production expenses 5,100. Administration expenses 17,000. So the total payment is 65,400. That is 38,500 plus 4,800 plus 5,100 plus 17,000. The total expenses which is relating to cash payments 65,400. So we have to find out the closing balance like opening balance of cash. Here 1,25,900. Okay, 1,25,900. Add receipts from debtors 2,04,400. So 2,04,400 minus total payments 65,400. 2,04,400 minus 65,400. The net amount is 1,39,000.